If you've ever watched a stock climb 40% in 2 months and wondered, is there still room to run, or has it already had its moment? That's a momentum question. Today, we're starting a new series on momentum indicators. This video is the foundation. We'll cover what momentum actually is, why it matters, and introduce the 4 indicators we'll be breaking down in detail in the videos that follow. So what is momentum? In physics, momentum is the tendency of a moving object to keep moving. In the stock market, it works the same way. Stocks that have been rising strongly tend to keep rising, and stocks in free fall tend to keep falling, at least for a while. Momentum investing is the practice of identifying those trends and positioning yourself to benefit from their continuation. Now here's something important. Momentum analysis asks a completely different question than fundamental analysis. Fundamental analysis asks, is this company worth owning? Momentum analysis asks, is this stock moving, and is that move likely to continue? Both questions matter. The best setups are usually when the answer to both is yes. Momentum works in part because of human psychology. Investors tend to underreact to new information, which means trends develop gradually rather than all at once. Institutional money adds fuel. A fund manager who sees a stock outperforming and buys it to avoid falling behind their benchmark is literally feeding the momentum. That's not a flaw in the market. It's a pattern you can measure. In this series, we're going to go deep on 4 momentum indicators. The Stochastic Oscillator, which tells you where a stock is trading relative to its recent range and helps identify overbought and oversold conditions. The Average Directional Index, or ADX, which tells you not which direction a trend is moving, but how strong that trend is. The ROC, or rate of change, which measures momentum in its purest form. How much has the price changed, and how fast? And the CCI Commodity Channel Index, which measures how far a stock has deviated from its statistical average price. Each one answers a slightly different question. Used together, they give you a much clearer picture of what's actually happening beneath a stock's price. Before the next video, I'd recommend reading our full breakdown on momentum. A link is in the description. It covers all 4 indicators in detail with formulas, signal interpretations, and examples. Individual indicator deep dives are coming next. Subscribe so you don't miss them.